So welcome to today's class. For you guys who are on here for the first time with me, my name is J.L. Espejo. I'm from Queens, New York. I'm a full-time trader, full-time analyst here from my home. I've been trading Forex for about 4.5 years. And, I recently became full-time. And I've been profitable for about the last 2 years. For you guys who know me already, everyone knows that I preach the importance of having the mindset behind the market, having, being prepared. You understand? Being properly prepared for whatever situation the market may present to you. That's the mindset that I give you guys. I also will teach you guys how to properly analyze the markets. Everything I've learned within the markets has been self-taught, except I've taken a few classes to learn a few certain areas that I couldn't discover on my own. I want you guys to understand that my inbox is always open for you guys who are interested in joining this adventure with us or have questions. You always know that I'm there. You guys can reach out to me. Don't be afraid to ask any questions. So, to get right to what we're going to go through, last class, we were learning about the Fibonacci retracements. And with the Fibonacci retracements, it kind of allows you to organize yourself within the markets. Like I was teaching you guys how to draw up the lines of support and resistance and the trends. And, as you guys start going down the timeline, the time frames, sometimes it becomes a little hectic because of the fact that you say to yourself, man, there's a lot of lines here in this chart, and I really can't see. I think I lost my track, or I think I forgot where I got started. And, that's why I use the Fibonacci retracement, because I'm able to spot those same support and resistances within each zone. But I can also understand possible areas where the market is either retracing or breaking out of. And, we've all learned about patterns and different, formations of the candles that allow you to determine different, directions that the market may take. But I want you guys to understand that within the Fibonacci's, when placing a Fibonacci, you want to look at the overall trend of the market. All right. When you guys are looking at the overall trend, you guys will understand that let's say if this is an uptrend here, right, and we're expecting the market to go down, I would draw it from what's called the swing high, or, the two highest point of the candles, all the way down to the swing low, which is the opposite. So as you guys can see here, most people, they like drawing the Fibonacci's to they'll place the Fibonacci points like on the lowest candle right after the highest candle. So you guys can understand that here, if you look at this chart, we can kind of already see that if we were to draw our lines out, right, and we say to ourselves, man, where can I enter this trade if the market does reach a certain point? Or is there an opportunity to trade this trade? Or what's the market actually doing? You guys can see here that by looking at this chart already, if we follow the lines along the Fibonacci, that we've already not only created different zones within the market, but we can kind of clearly see what the market is reacting to, where it's going. And we notice that every line has a number value to it. And, long story short, the guy who came up with the Fibonacci's, this gentleman, he kind of had like this algorithm that detected like certain points of the market within the trend that you usually either had retracements, or, it was where the market would usually kind of bounce off of and continue in the direction it was going. So as you guys can see here, if we focus on the numbers here, the numbers I want you guys to focus on is 38.2. If you guys want to write this down, you can write 38.2% line, the 50% line, the 61.8% line, the 78.6% line. These are your major retracement levels. The 23.6% line is also a retracement level, but it's usually the first barrier the market has to break out for it to continue going in that trend that it's going overall. So here, the dope thing about this is that when you guys are looking at Fibonacci's, you guys can automatically assume here, all right, let's say we were looking at the market and we noticed that how many times the market touched, broke out, and came back in and retested this line here. So we can look here and we can see that it's formed a head and shoulders. Bang, it came down. What did it do? Once it broke out, came back down to that 38.2% line. When it started retracing, where did it start retracement before it came back down? At the same line that it eventually created this head and shoulders at. So we can start seeing here that this line has some either strength or importance. So we say to ourselves, all right, if the market was developing here, then now we know, we can see if we break, literally, if you guys start looking at the lines within each other, you guys can see that every time the price comes back to this line, it eventually either breaks out and comes back to retest, or it would have a lot of strong stallment within price. Now, is anyone confused, lost? Any questions? Please put it in the chat. I want to allow you guys the time. I want to keep everybody in the same pace. I guess nobody has any questions, but all right. So here we notice also the 78.6% line. Here we can notice that the price, every time it reaches here, it has a strong stallment. So now that we see that the market is developing here, right? And then we start looking at what the market is doing. We say to ourselves, oh, this kind of looks like an inverted head and shoulders, and it's riding along the support of this 78.6% line. So if the market does overall form this pattern, I now know, based off of my previous training, that I have a possible entry to trade this trade and ride it up to here for the short term. Now, if it breaks out of this line here, if it breaks out of this line, I now know that my next resistance line will be here, and I can expect some retracement back down here before it either continues to come back down or go back up. So then now we have a game plan. We have a game plan. All it takes now is to say to ourselves, all right, let's find a lower entry. So tying in everything I've taught you guys, if you guys go ahead and use the same exact strategy that I've taught you, you can now say to yourself, all right, this looks like a decent opportunity. If I can find an opportunity within the lower time frames based off of this Fibonacci here, I can say to myself, here, this is the 4-hour chart. If I enter the market around here and close around here with a good lot size, that's a nice trade from 149 all the way to 152 on a dollar lot. That's about like, on GJ, that's about like $5,000 alone. So I want you guys to understand that, within the markets, the opportunities are unlimited. You can literally, if put a nice little trade from here to here, and make some decent money. The point is that we've eliminated the fact of the money, and we've now analyzed and observed for an opportunity for a trade that can eventually pay us out the money. Now, we're not focusing on how much money, we're focusing on how good of a trade can this be. And now we're going to look for confirmations. So if we say to ourselves here, if this is the trade we eventually want to do, as we can see that the line is being respected still, we notice that the market is still holding off on this support line. And if it breaks out of it, right, we now know that we can target it. We can target everywhere that the market is going. If we look for opportunities here, we now know before it can reach this barrier, it has to break these two barriers here. Now, anyone who has any questions please ask them now before I continue. I want everyone to be on the same page with me, because this is very important for the next lesson that we're going to go through.
Hey, Jose.
Yes.
When you place your Fibonacci tool or indicator on the chart, it doesn't really matter if you're coming from the bottom to the top or the top to the bottom, does it? When you're
So if I'm on an uptrend, I want to place it from the top to the bottom. If I'm on a downtrend, I want to place it from the bottom to the top.
okay.
Does that help you understand?
Yes.
So let me show you guys real quick how to easily draw a Fibonacci real quick, because that's probably another question a lot of people have, is if we were to go to the basics, how we learned in the beginning of the course, right? Let's say from here, this whole trend right here, this downtrend. If we looked at the market within this, right, we can see that I can draw it out easily. Now, for those of you who have a hard time spotting that, just simply draw your support and resistance lines within the area that you'd like to draw that Fibonacci, and simply just put the Fibonacci from the support to the resistance on a downtrend. And then if you look at it, you should be able to spot, to confirm it, to confirm a trend. How many times do we need the market to tap that trend line?
At least 4 times.
3 times to confirm it. 4 times is where we expect the breakout. Remember that. So if we're looking for a downtrend, right? Which trend line will we be focusing on? Support resistance, right? So that's why I want you guys to understand. If I were to draw this from the bottom up, then I can at least spot that resistance within the market, as you guys can see here, within this trend now. You can literally just draw the trend out. You can literally draw the trend out, and then if you guys want to, literally place this right here, and you guys can see that right here, I just drew a really nice Fibonacci. Not only is it hitting the lines that it has here, but it's also going on the money with the trend line that I drew here. And what happens? It had 1, 2, 3. On the 4th touch, it broke out. What winded up happening? Look how many times it winded up retracing. It hit the 61.8 line, or eventually got there. The market gapped here. Then the market opened up here. You know, it came down. Actually, the market actually opened up here in the 50% line, came back down to the 61.8, then started going up. Here, look, as you guys can see, the market broke out. For those of you who were in the previous class, I like to look for this. If I see that in the first time that the market is going through this line here and it breaks out of it very strong, then I know usually there'll be some retracement or some stallment in price in the next line, which is the 38.2, as we can see here. And what did the market do? Once it hit it, it came back down. So if I missed out on buying here, I can look for opportunities here to buy this trade and ride it up. If I miss this opportunity, I now know that she has to retest this resistance line, which in this zone becomes the what?
Channel?
No, this becomes the support, remember?
Wow.
The resistance converts to a support in a new zone. So that's why I want you guys to use this, because this is the confirmation we need to know that this trade is not going to go sour on us. We need that retest. If she retraced upon hitting this, went down and broke out, we need to see that retest. You understand?
Yes.
So as we can see within the market here, if I missed both of these opportunities here, right, I now know that I can at least catch the next one, which is within either here or when it retraces here and comes back down. This is where we want to look for the opportunity. Now you can see how many times it hit this line here, and then once it hit the top, what happened? Hit the top, started coming down. And as it was coming down, if you look at the market, even if we extend out these lines, you understand, we can notice that what? The market eventually still respects these lines. You see that? Can you guys see that clearly?
Yep. Yep.
Here, even though the Fibonacci is drawn from this trend, we can still use these level zones to understand, hey, look, I now know that if I missed out completely on this trade, I can look for the opportunity here to enter this trade and attack it to the best of my abilities. And look how many times you had the opportunity to ride this trade up before it shot up. You see this? It broke out, retested, we entered. Literally, this is how I trade. Once I see the breakout and the retest, I put a position. Once I see the breakout and the retest, I put another position. And then I start using my technicals. If I see a double bottom, here, there's another one. I'll look for the breakout, the retest, boom, put another entry. Same thing here. Look how many times I could have entered this trade. 1, 2, 3. So, you know, within the logic of how we're trading this, we could have attacked the crap out of this trade, and by the time the market would have got up here and it would have retraced a little bit, now we know because of our support and resistance, right? If we go ahead and spot the opportunity in the market, as I told you guys, when we were learning about the head and shoulders, when there's an inverted head and shoulders in the market, usually at the top of its highest point when it breaks out, you'll usually find that the market would develop a regular head and shoulders to kind of retrace some of the room it's gained. You guys are with me? So here, if we were to draw a Fibonacci from here to here, we now know what? That the market either bounced off of the 61.8 or eventually she'll come back down to the 50% and touch it. So here, we're going to look for the opportunity in the market. So here, I notice what? That the market seems to be coming down. So if I find an opportunity within the markets to kind of short this, right? I now know at least I can short this trade from wherever it's at now to like these are possible areas to take profit. If I was trying to buy this trade, since it's kind of forming an inverted head and shoulders here, I would at least look for the opportunity to enter this trade. And I would either like to wait for the market to try to come back down and test its previous support, which is here. And if I do enter this trade, I now know worst case scenario, this would be my stop loss area because this is the last previous support in case of the breaks. Are you guys understanding my thought process here?
Yep. Hey, Jose,
Talk to me.
just in regards to if you placed several trades on and it got towards the top of the market, would you take those top trades off and let it retrace and keep your bottom ones on?
It depends. Me,
Yeah.
I'm kind of shifting from I like scalping, but
Yeah.
I kind of get bored of scalping sometimes because, you know, it gets tiring to like be like freaking hooked onto the computer or your phone just to make some money. I'm now doing a little bit of everything. I do scalping, I do day trading, I do intraday trading, I do long-term trading. You know, that's why I look at the the longer time frames.
Yeah.
Because when you say in terms of taking some profits, yes, sometimes I do take profit on some of them just to put some money into my pocket if I need it, and then I'll hold my good entry. So let's say this was the long term here, right? Because here we can see that this was September of last year all the way to now. So let's say if from September I placed trades here, right? I could have been scalping with higher lot sizes to kind of make my money to maintain myself. But from here to here, I would have rolled this trade as long as possible Because here I know that these are my best entries. The market is, if I drew out my fib, right?
Yeah.
So here, I'm gonna show you another way how to use your fibs, right? So let's say, and this would probably answer your question. So let's say that the market hasn't developed itself yet, right? And we're looking to buy this opportunity here. Let's go to the higher time frame. Let's say I wanted to buy this. And I draw it from the bottom to just understand what the market is doing, right? In terms of the long-term downtrend, I can see here what? That it's not on par. So that means what? What do? We draw it from the bottom up. So here I know the 50% line is here and my 0% line is here. And my 100% line is up here, right?
What hour is that?
This is the daily.
Daily.
Now, you can draw your Fibonacci. Excuse me, I'm doing it wrong. You can literally draw your fib from this support line here, right?
Mm-hmm.
And we can look for this Fibonacci here.
Yeah.
And you literally can draw it. And now you can see what the market is doing and where it's doing it. So if it breaks out, right?
Mm-hmm.
If it breaks out, I can easily delete this and understand if it comes into entering this zone, now I know how to attack it in a way, because if I was looking long term, this can be one take profit. This can be another take profit.
Nice.
You understand? So look, and it's on par.
Yeah. Yeah.
So does that answer your question in a way?
Yeah, it does fully. 100%.
So I like using the Fibonacci because of the fact that, and I kind of drew this out a little wrong. Let me see.
Hey, Jose, can you also bring them to the attention when using the fib to draw the floors in on all the supports and resistance to understand where the turnarounds are going to happen in between the fib lines?
Yeah.
Oh,
Yeah.
CEO.
Yeah, it's very important because you guys want to understand the overall direction. You understand? Like I was telling you guys, when we break it down to zones, it's very important because if I know, if I'm using, let's say I'm using the Fibonacci, right, and it breaks out of my Fibonacci, you know, some of you guys your heart starts racing and you act out of emotion. That's why you want to always prepare yourself. You understand? Or understand, if you're a person that's good with numbers, remember the price areas. You know, if you focus on the price areas, and then as you start looking at the smaller time frames, you'll be able to develop a decent game plan that's going to allow you to attack the market the best way to your ability. You know, imagine if I give you 6 months worth of trades. You guys will all be happy, right? But imagine if you were able to literally find on your own 6 months worth of trades like that. I know possibly for the next 6 months, you know, GBP, JPY, and this is just using as an example. GBP, JPY can go ahead and, you know, we can expect it to go up because it formed on the monthly, you know, it formed a double bottom or whatnot on an uptrend. So if it doesn't break out of this support that I see here, right, then now I know that the market, if it retests here, now I know that this is a possible buy entry, right? So this may take a few months, right? So that gives me, for the short term, I can possibly sell the GBP JPY. Are you guys with me?
See.
So these lines here, guys, that I'm just pointing out to you right now, is 100% imperative when you're trading these fibs and understanding where your take profits and stop losses are going to lie. If you do not have them in place, you are freestyling the fib, and it's highly, highly not advisable.
Yeah, it's very dangerous to freestyle, guys. Like I said, you know, because here, let's say that the market does come down, right? And bounce off of this, but then it breaks off and hits here. Can someone notice a pattern that it formed?
Ascending triangle. Wait, was that
Descending
Head and shoulders.
head and shoulders? Yeah.
A head and shoulders. And what's a head and shoulders show us?
It's on the way down.
Right here. If it hits here, right, then now it's going to go to what? Its previous support. So if we look for its previous support, that means that the market can potentially come where? All the way down to here.
Mm.
Now, this line's a little crooked, but you guys are getting what I'm saying, right?
Yeah.
So that's why I want you guys to understand, you know, prediction within the market, it's hard, but if you get good at understanding, you know, possibilities when the market gives you certain signs, that's when you guys will be successful. Because here, this is the monthly. I can grant myself trades from today all the way till June. It says here, look, for the market to reach here is July 1st, if it reaches here. This much data to fill up is from here to July. You understand? Imagine if you could find yourself opportunities from here to July. Let's say you place a sell. You find a really good entry to sell at, right? And then this trade starts going up and down, right? You can at least hold this trade long-term from here till July. You understand? And from here to July on a 10-cent lot, that's $3,000. You understand? Imagine making what you make, and then from here to July, you still guaranteed yourself $3,000. That's good money. You know, some people take 6 months to make $3,000. So that's why I'm telling you guys that the system that I taught you guys is very important. The structure of the system is even more important, because if you do follow the same step, no matter what tools you use to defend yourself, you will always have a plan and you will trade your plan. You're not going to, if you fail to plan, right, you plan to fail, right? We've all heard that quote before, right? And if you don't, if you don't trade your plan, you also plan to fail. Now, they also say that a goal without a goal without a plan is just a wish. So, you know, now you're wishing that the market goes down. Obviously, within the market, there's going to be key areas that the market has to break out of, you know, and it's important to understand that. But shit, if you can sell from here to here and make a few bucks here, right? This is 149 all the way to 146. On $1 lot, that's 3,000, right? We catch the retest from here to here. That's almost, if you had enough funds in your account and you're using dollar lots, that's from here to here is almost like 5-6 grand. So here we just made what? Freaking 3, 6, 9,000. Then we catch it from here down here. Bang, you know, you can spot the opportunity. You can, you know, you will guarantee yourself a check. Guaranteed. So that's why I want you guys to practice this. Before I continue on about breakouts and fakeouts, does anyone have any questions or concerns? Anything they want me to clarify? Can everyone feel comfortable using a Fibonacci after today's lesson?
Yeah.
Yep.
For those of you that I've basically summarized everything that I showed you guys in the last class in 2 hours. I showed it to you guys within minutes. So, you know, I hope that I will still post this up. I'm going to pause the recording. And then, as a matter of fact, should I just leave it and then just make this the third class on YouTube? What do you guys suggest?
Yeah, it's good.
All right, that's what.
Yeah, good idea.
What do you think, Dan?
Hey, your students are telling you what's up.
Hey, just asking the partner, man. But you know, so
Listen to the people.
here we're gonna learn about breakouts and fakeouts, right? So here we have an ascending channel, right?
Hey, Jose, can you just do one favor for me as well while you're teaching this particular lesson? Can you just, for all intents and purposes, put a line right up the middle of that channel and get the guys in a habit to do that so they understand to stay the hell away from entering trades in there?
Yes. It's like I was explaining to them, you guys never want to enter a trade and get caught up in all this. This is the worst. Now, yes, this is on the daily, so you know these rises and these drops. But either way, we're speaking in a general perspective. You never want to enter a trade on a buy here, and you have to deal with this and kind of this roller coaster before it does this. And then let's say you were trying to sell, you were trying to sell here, and now you got to deal with all of this. You know, so it's all about understanding what the market is doing. Like I said, you know, what opportunities is it giving you, how to spot all that. But back to what I was saying is how to detect fakeouts and breakouts. You guys learned about patterns, right? You guys learned about how to trade triangles and symmetricals, wedges, you know, and you guys understand within each channel and trend, you're going to spot these bad boys. You're going to see opportunities where it's going to give you a reversal and it's going to show you. Yeah? Someone calling me?
Can you see that?
Mm-hmm. Wait, draw it again?
Yeah, hold up. Accumulation?
Yeah, that's actually distribution at the top of the zone. That's confirming that's confirming the drop that we wanted to do. But
That's hard to draw.
Back to what I was saying as well. You know, I want you guys to understand. You know, if you guys get really good at drawing your support and resistances, right? You can spot where the market can potentially break out and where the market can fake out. Here. You know, so if you have the market within its current trend and channel, right? Let's say you were trading this channel here. And you notice that the market did this. It broke out, came down, and you're like, oh, crap. I'm going to get out of this trade. Right? And then all you see is this. Price accumulating and gathering itself, building that pressure. Right? What if we had failed to look left and look at what the market was doing? Right? We would have not noticed that this was a what? Major support area. Right? This was a very important support area. So had we not drawn this line out or understand that that's what was happening when we saw this breakout, as opposed to just closing in loss, we could have prepared to find a better entry to buy this and catch it back up into the zone. Are you guys with me?
Yep.
Yep.
Yeah, bro.
Did everybody understand what I said there, right?
Yeah.
Yeah, right. Yep.
So that's how simple it is to trade a breakout and a fake out. So here, right? What do we see here? Right away. What's this? An ascending triangle, right? An ascending triangle after it failed to do what? Break out of this support line. It started forming an ascending triangle, right? We would have traded this as what? As a buy once we saw that the market had broke out of it and retested. Boom, we ride this trade to infinity and beyond. You guys understand? You guys are understanding that? So here, it broke out of the market. Sorry, it broke out of the market. I mean, out of the trend that it was in. But what did it do? It came back in. Now here, let's look at let's look at something else.
That's 10,000 pips.
That's a lot of pips, huh? Who would like to put a dollar lot on that?
Gee, yes.
Just say win, bro.
Yeah.
I know Hemi somewhere over there rubbing his hand like,
Yeah, Hemi will be having a heart attack if we make him hang in there for more than that 500 mark.
Oh, yeah, over $500. He's cashed in, bro.
Oh, he'll be sitting there in a straitjacket. He'll be like, hold it, and he'll be like, oh.
So I want you guys to look at this downtrend here, right? And like I said, you want to draw your support and resistance lines. I don't know what's wrong with me. I'm drawing all my lines crooked today.
Cross-side.
Here, we're going to detect how many times she's touched this line of resistance, right? So we have it 3 times, right? It broke out, came back into this trend, but eventually it winded up doing what? Breaking out, retesting, and shot up. Right? So here's the fake out. Now we've drawn out a support and resistance.
So, Jose?
Yes, I'm here.
Yeah. So, essentially, would you say that a fake out's basically something that breaks out without a retest? Is that how you'd read it normally?
A breakout is failure to, so like, you know how when we see a breakout of the trend, right? We want to confirm that that breakout by where it retests its support and doesn't come back into the trend or the channel that we're looking at. You understand it? You understand that? That's a fake.
Does everyone understand the reason why a fake out occurs in the market and then comes back into the channel in terms of trading?
No, not really.
Yeah, do you want to say something like that? Do you want me to move forward?
No, go ahead.
I'm going to talk about a subject that you guys will learn in due time. I will only roll this onto you once you understand the fundamentals and technical analysis that we're teaching you. Long story short, what the fake outs are initiated, it's to do with volume also in terms of trading and in terms of institutional money. Basically what's going on is it's a play to force a price action in a particular direction. They are only looking for a small amount of pips, but with such volume coming through, assisting the fake outs, it fails to test a certain point before. It's basically a manual manipulation for the institutional money that's coming in. If you pay attention to volume at the same time and correlate that with the push, you'll notice that the actual orders, if you're allowed to see them, are closed off and they take their profit, and then it comes back into the channel. Does that make sense to everyone?
Yeah.
I don't expect you to completely grasp that, but that's basically what happens. In simplified manner, guys with big pockets came into the market, decided we're going to put orders that direction. They forced it that way. They only wanted to catch minimum pips because they had big money pockets going down. They took their money, they got their percentage, got back out. And then what happens is the market then comes back into its trend where the majority of the volume sits.
Yeah, and also to add into that is, like, you expect when the market breaks out of a trend, you expect it to continue in that direction it broke out of, right? Usually, I want you guys to understand, a breakout is exactly what it sounds like. A breakout, it broke out of the trend. And then, to confirm that breakout, you want the retest of that trend line, but in the opposite zone. So if the market broke out, we want the market to retest and then continue going into that direction it broke out of. Now, to confirm a fake out, right? We want the market to break out of its trend line and then come back into the trend line because it failed to retest that line. It just basically came back and broke back in. You guys are with me?
Mm-hmm.
Yep.
James, does that answer your question?
Yeah, it does. Thanks, mate. So yeah, a fake out's basically a breakout without a retest.
Exactly. So that's remember to confirm anything we look for, we always want to look for that retest. You understand? When you're attacking the market, right? And let's say you're looking to long a position, you know, you always want to place your longs or your buys at the support. So we always want to look for the retest of support. When we want to sell, we always want to sell at the retest of resistance, or when price confirms that it hit resistance and it failed to break out. You with me?
Also, keep in mind, guys, with the retest rule, when you are applying this to crypto, 7 times out of 10, it ignores retest on the smaller time frames. It just goes.
Yeah, because
so just
crypto
keep
right
that
now
aware.
its own flow of money. It's not like not all like technical analysis can apply to it perfectly, but you know there's so many other factors that move it. It's just like the stock market and the forex market. You know how we can have the most perfect technical analysis, but then if we're trading like on a day like on NFP, right, that can have a huge effect towards the market. So yes, it may blow past our technical analysis, but at least we know eventually she'll come back into that zone. So if we lose, or that's why it's important to eliminate the emotion of money. Because if you lose out on money, right? Let's say you lost in a trade and you lost big time. You're scratching your head and like, oh my God, you know, wanting to shoot yourself, you know, prepare yourself. Come on, I just lost, all right. I'm going to get it back. Let me see what the market is doing. I know that she broke out of this line right here. Eventually, she has to come back and retest it, right? So here, perfect example, right? I'll give you the best example possible. She broke out of this line here, right? You guys see this? She broke out of this line here, and look where she retested. So yeah, it may have taken me a few days or weeks, but at least I know if I keep an eye on it, I now know that eventually she's going to retest it, and I want to look to either buy from here or I want to fucking just get ready to sell this if it breaks out of it. You understand?
So Jose,
Yes.
what brings you to the point of deciding whether it's retesting or not?
To confirm retest, you just want to kind of look at all the time frames. I like looking at the lower time frames because I like entering my trades on the lower time frames, like we were discussing earlier privately.
Yeah. Yep.
It's easier. It's easier. You know, it's less stressful. You know, imagine waiting a whole day for this candle to form, and throughout the whole day you're dealing with all the movement within that one candle it formed. You know, so if you look at the smaller time frames, you're gonna get like a million confirmations that it's retesting that line. So what do I mean by retesting, right? Here, it broke out, market kept going, failed to continue going and creating a higher high, right? Within that trend. You see that? It broke out of it, and then it came back to retest that support line. You see this?
Yep.
So this confirms that the market is in an uptrend as long as the market does not break out of this support line and comes back into the zone. You understand?
Yeah, and you'll be looking on the smaller time frames, like the 1 or 5 minute.
Yeah, of course. Because look, from here, this is 162, and by the time this candle gets here, we're looking at 170. That's almost 8,000 pips.
Yeah.
You know, and that's a lot of money. 8,000 pips on a penny lot is like $800.
Yeah, sweet.
You know, so I'm just trying to. I want you guys to understand this because remember, everything I'm teaching you guys, we're trying to string everything we've learned together. You understand? We started from the very beginning, understanding how each candle opens and closes. You know, for those of you guys who, it will be on the course if you paid for the course. and it's going to be temporarily on YouTube. So go ahead and take advantage of that. For those of you who, you know, understand support and resistance, we now know that support and resistance here, see, we learned how to draw two lines, support and resistance. We either have a descending channel, we either have a ascending channel, or we have a horizontal channel. We learned about channels and trends. We learned about how to spot a downtrend, and we learned how to spot an uptrend. You guys see what I'm saying? We learned how to spot triangles. We learned how to spot what, wedges, right? We learned how to spot double bottoms and double tops. We learned how to spot what, head and shoulders. We learned how to spot inverted head and shoulders. So there's a lot of information you guys have learned. Now, what I'm trying to put together for you guys is, you know, like think of it as a jigsaw puzzle. For all you guys who don't know how to put it all together, go back to the basic. Anytime you find yourself stuck or you're losing or anything, always go back to the basics. You understand? Go back to the basics. If you have to go back to drawing out every support and resistance and finding that opportunity in the market, go ahead and, you know, find the trend. Do the same exact 3 steps I've taught you guys. You understand? Find the trend within the larger time frames. Look for the channels. Look for the opportunities within that market. So here, there's a support line, right? If it fails to come back down, right, and retest this support line of the uptrend, then now I know I can at least ride this and hopefully, you know, look for confirmation that this can possibly be the breakout of this channel, because what? It's touched it more than 3 times, 4 times. So if it comes up and gives me enough pressure, I now know that this market can go up. I can ride this up until the next previous resistance. Right? So do the math from here to here. That's almost 16,000 pips. So
Hey, Jose,
yeah,
can you just drop the support line in on that same area that you've just gone into? So just to add to what Jose's got right now, guys, basically, he's basically showing you your limit. Hang on, sorry, there's just things going past me. Okay, so reason I've got him to drop the support line in there, guys, is this is going to help you guys understand that when you get into this zone here, you don't freak out when it does this before it comes back down or something like that. The reason that support line and resistance zone is drawn out for you is to understand where it's going to range. If it's done it here, and it's done it here, and it's done it here, it's going to do it here.
and
Can
then
you guys
what
see every
does that
time it gets to that area?
What does that complete, Dan?
That'd be a 4th test in that particular zone overall as well.
Yeah, right here.
So what we're looking for is to watch it, how it's behaving. Just because it's a 4th test, guys, does not mean it's going to go poof. You need to wait to see how it responds.
Yeah, that's why I'm trying to tell you guys. If you guys tie everything that we've taught you guys so far, you know, I can teach you guys some really advanced stuff, but you guys are not going to understand and master it if you guys can't master this. You understand? I'm telling you, for a good year, I was profitable just trading this. Channel support, you know, resistance, breakouts, fakeouts. I never knew how to trade a triangle up until recently. You understand? And that's why I'm trying to tell you guys that if you guys master this, you guys get good at it, you guys practice it, you understand, you guys are going to become really because we are developing the mindset of traders, not freaking money makers. You make the money
Gamblers.
when you become a good trader. When you're betting on money, you're gambling. You understand?
So this area right here, guys, there's a reason it only retested to there, because that would be also considered this area support and resistance. Therefore, what it's done is it's come down, it's broken its support, it's sprung down and sprung back up to test it, it respected it, and shot away. So this is the key to the 4 touches, is you need to understand just because it touched 4, it's not going to go the way you think. You act accordingly to how it's telling you it's going to move next. So you have to wait to see how it responds.
Exactly. And going back to using the Fibonacci's, say we use Fibonacci's, right? Let's say we were to use the Fibonacci here. We'd at least know what? That this is a major area of retracement. This is an area of major retracement. This is an area of major retracement. And so is this one. So what does that tell me? That the market is currently under or above a major area of retracement. So it's either going to bounce up or it's going to bounce down. You guys with me? So here we tie everything together. Here's a what? An uptrend. We find the resistance to this trend. It's touched this.
One, two. Oh, something pressed on.
So if in this case, the market breaks out of here, I now know to prepare myself, right? By finding all areas of support. Yep, and that's exactly what I was about to draw. I swear, me and Dan like connect with each other, even though we're like fucking opposite sides of the world. James.
Lovers, eh?
Oh, here we go. I knew he had to say something. You can't not say something.
No, but James, are you with us? I know you're one of the new guys here.
Yeah, mate. Yeah.
How do you feel with all the information I've shared with you today? Do you feel confident you can apply this on your own, or would you need some more time to review with me?
No, I think I understand pretty much most of it. I'm already doing a bit of trading with support and resistance. It was just defining the like the breakouts and the retests and all that, and just defining your entry point.
Yeah, like if I can, let's set up a time. You and I, let's have a one-on-one. You and I, and I'll kind of go over the 3 steps. I want you to try that out for a week, and you tell me if it's better than what you tried in the past, and see if we can possibly shift the momentum in your trading career.
Yeah, man, that'd be awesome.
Ask Amy how that's going, man. He was the same as you, trading the support and resistance in the channels. Just gave him a few tweaks, and he's on his way.
Yeah, where's Hemi? I think he left.
Yeah, he left.
All right, who else is here? Jose Caraval. I've never gotten to talk with you. What's up, man?
What's good, bro?
Where you from?
Right here from Kansas.
Hey, Kansas. I used to live in Oklahoma, in Tonkawa by Ponca City.
No shit.
Pretty dope. Let me ask you, how does the information I've shared with you, how does it help you out today?
Oh, it's helped me out a lot with the support and resistance part.
Yeah, man. Like, you know what's crazy? Like, everything I've drawn out for you here, if you guys ever look at someone's, like, technical analysis or you look at it, if you didn't know what you were looking at, you'll be like, yo, what the heck is he saying?
Yeah.
Hang on.
I hope the clarity of the information I shared with you, Jose, it helped you out. You know, feel free to reach out to me. I want you to connect with me. Write to me on Facebook. Let's get to know each other. You know, see how I can help you out moving forward. All right?
Yes.
So moving forward, when I speak to Jose C, I'm going to say Jose C.
Yeah, no. To
JC.
fix that problem, everybody.
JC.
As opposed to calling me Jose, just call me JL.
You can call me JC, I don't know, man.
Yeah,
or just call me Joey, dog.
All right, JLJC. All right. JC, just quickly, use the support and resistance and the Fibonacci that you've learned today in conjunction with the triangles that I know you already use. You know how occasionally you've traded triangles in the past and you've been caught with your pants down severely and you're like, what happened?
Yeah.
That's because of this. This is the missing tool you need to apply when using the triangles so that you understand it's actually flipping on you. It's not It's not an ascending triangle or a descending triangle. It's hit a crucial point within the Fibonacci retracement, or it's hit a key support or resistance area on a larger time frame. So it's going to disrespect your analysis of the triangle.
Yep.
Very dangerous. Very dangerous. Ask JL.
Oh yeah.
With this
Yeah,
man.
That's my bank account, bro. It's okay.
You're about to be singing the 21 Savage song. I got 1, 2, 3, 4, 5, 6, 7.
Well, you put a couple negatives in there.
I know Bassett's over there. Bassett's making music to our class today. Bassett, how's this feel for you, man?
It's all right. It's all right. I'm learning.
Is it making sense for you? You have any confusion?
Bassett, we'll line up this week coming.
What's happening?
This week coming, we'll line up and arrange a time. We'll throw you on a live chat and we'll see where you're at.
Oh, me and you. Okay.
Yeah, no, I've already spoken to them. Next week we'll do more trading of what we learned before we continue learning any more advanced stuff. These classes we'll do like actual like live trade sessions. How would you guys like that?
That'd be dope.
Yeah, that'd be really good.
Awesome.
Also,
Okay.
for those of you guys who haven't paid yet for the course, everyone who's for those of you who haven't paid yet and is in this webinar today, I'm gonna give you guys a discount. So everyone reach out to me. I'll give you guys a promo code to save yourself $150 on the price. And you know, I want you guys to secure your spots because we only got like, I think we only have like 15 spots left of the top 50. And you know, I really like this core group. I recognize a lot of the names. And you know, I want us to continue growing from here. Zachary, talk to me, man. How's this information feel for you? Let's see.
Man, my flight's been like delayed hard.
Let's see. Roberto said great. Yes, the webinar is being recorded. I'll upload it to YouTube as soon as we're finished. Mark, where's Mark? Mark, talk to me.
Right here. What's going on? Yeah, I'm liking the Fibonacci. Like I use the Fibonacci, but I always usually just drag it all the way to the right. You know, as in a future tense, just to run it through. But I like it there. It just gives a good guideline. And then the trend channels is pretty helpful. I like the 3 tops before it rises up. I like how it has to touch the support trend.
Yeah, remember that's how you confirm a trend or a any type of trend. You want 3 touches on that line. You know, that's something very important for you to confirm it. Sometimes for you to confirm that trend, you can actually go on the lower time frames and look for those 3 touches, and then just drag out that line, and then expect the market in the longer time frames to touch it. That's a trick I learned. That's
how I used to use the Fibonacci, was just to run it, but I used to use the previous support and resistance as target profit targets. I used to run like 3 to 4 targets per once it starts jumping, breaking out.
Dope. Yeah, we'll actually go over that on our one-on-one. I want to see how you used to do it and then compare how we can do it, you know, kind of like moderate it and figure out a working strategy for you, all right?
Oh yeah, I'm liking your style. I'm looking at it and I see how I can adjust already. Like yours is cleaner. It has like a cleaner like path, like what I'm trying to learn. Because I can see like patterns, like, you know, the inverse head and shoulders, the cup and handles, the 3 white soldiers and all that. But then like knowing the directional path where it's going, like you're doing right now, is actually nice.
You wait, man, till you get the next hitch up from here, and you understand Wyckoff and combined with all of this. Oh.
Yeah, Wyckoff is my secret weapon, dude. That's like my my nuclear bomb to my war. No, for real, I'm gonna teach you guys some good stuff, man. You know, I want to make sure that everybody understands all of this, so then in the end, everything we do teach, we understand it. All right.
Sounds good, man. Sounds good.
Brian, my man, Brian, how you doing? Oh, Brian.
I'm good. Yeah, I'm here. It's muted. I'm good. I'm understanding what's going on here.
Perfect.
All good.
Let me see. Do you have any questions for us? Anything? I know you're catching on to this information really fast.
I don't right now. I had one earlier just about drawing out the Fibonacci. I think I'm good. It's just a matter of continuing to apply this and practice.
Give me 1 second. I'm sorry. Let's make sure to write that down and remind me on our next one-on-one. All right. So we can practice that, even though you probably understand it a little bit better, but we'll practice it more on our one-on-one.
Okay.
All right. So just write that down and reach out to me and Dan later on in the day or in the week, and we'll set a one-on-one. Let me see. Glenn, talk to me, Glenn. Glenn's not here.
Hey, bro.
How do you feel with the information, Glenn?
Yeah, still learning, man, and just following along, trying to learn you guys' language, So,
yeah, just
good.
understand, man. What goes up must come down.
Yeah, exactly, right.
Now, just reach out to me.
me.
Reach out to me on Facebook. Write to me a message, and I want to get to know you and figure out a game plan to help you accelerate your process. All right?
For sure, man. Appreciate it.
Hey, JL, remember earlier how you were layering the Fibonacci's? Like, what was the purpose of layering it, like every trend, like the difference in the trend?
Yeah, the reason I layer it is because if I let's say I'm looking in the lower time frames, and higher velocity, you can literally stack up like Fibonacci on top of Fibonacci.
Oh, so you changed it at the different time frames.
Yeah.
Okay, it makes more sense. Okay, it makes sense. Awesome.
Yeah, we were on a lower time frame. That's why I did it. Now we can do it on the higher time frames, but that's gonna take a shit ton of time to make up for that ground. But I want to show you guys. Let me see. Is there anyone else here? Oh, Helena. Helena, how you doing? I see Miss Lewis is here.
Hi.
How do you feel with the information?
It's a lot to digest, I get, but I'm kind of understanding it. I'm pretty fresh.
All right, just make sure you get in
fresh
contact.
To it all.
Yes, make sure you get in contact with myself or Dan, so we can do a one-on-one. I want to catch you up. But before we do our one-on-one, I want you to be caught up to date with all the webinars. All right?
Yeah, for sure.
Make sure you watch all the videos, because everything we're gonna speak on our one-on-one is gonna be based off of what you learned in those 2 webinars. All right?
Okay.
All right. I'll speak to you soon. Let me see. Anyone else here? Zeph, talk to me, man.
No, I'm good, bro. I'll probably book you or Dan later on sometime. But so far it's been good. So
what you guys will find is 9 times out of 10, what seems to be very regular, it's not intended this way, but 9 times out of 10, when you book one of us, you find that one just ran or down.
Yeah,
it's not always going to be like that.
Yeah, I usually peek in, and me and Dan spend a lot of time during the day talking. So, like, since I know like the actual terms and Dan knows the actual execution, I kind of get him up to par. So when you guys ask questions, we're both on the same page.
The webinars, is that the one that's on YouTube or the one in the class, the website?
Well, everything that's on YouTube is gonna stay in the class for good. The classes on YouTube will come off at the end of the month.
Okay, but the one you're talking about, make sure you watch all of them.
Yeah, it's 2 of them.
Okay.
Yeah, because the last one was the Fibonacci training, but since it's in the beginning of this, I'm just gonna upload this one, and we'll be able to take advantage of all of that.
All right, but
let me see. I feel like I'm missing someone. Jerry, Rob, Roberto, Matt. What's going on, guys?
What's up, brother?
How you feeling,
What's up, Jose, man? It's good, man. It's good. I think that, just thanks for the opportunity, man. The teaching is good. Learning a lot.
No, it's my honor, man. I'm the humble guy here. I'm humbled by the day, You know, when we first started this, there was only 4 people in the webinar. We have 21 in here now. It's crazy. But
Yeah, it's awesome. The vibe is awesome.
yeah, I'm here. I'm here. I just want to be the best. You know what it is? When I was learning, I had no one paying it forward to me. Nobody really wanted to share the information with me. It was like a secret. Everybody was keeping the secret from me, and they wanted me. They wanted me to. They wanted me to, you know, like basically figure it out on my own, and that's why when I got the opportunity to be the mentor and the leader for you guys, you know, I don't even want to be the leader. I just want to teach you guys, and I want to grow with you guys. You know, they say that.
Yeah,
They say who you surround yourself with is who you become, and I want to surround myself with great and amazing people. And if it takes for me to help them build that, you know, I'm here for that. You know, I just want to pay it forward. I'm humbled by everybody. You know, I want to take this opportunity to take any last minute questions before we end the webinar. I can upload the video on YouTube. But other than that, for those who have purchased the course, this will be also uploaded to the course tonight.
Nice.
And you know, tomorrow I have a few things I got to take care of personal, so I'm not gonna be able to finish uploading stuff to the course up until my goal is to try to have the course fully uploaded by Sunday. But something popped up, and I'm gonna have to take care of something personally, which is gonna delay it. So if it does, you know, like I said, we're gonna continue these live classes even if I finish the course or not. You know, the course is never ending, guys. You know, I'm gonna offer a 5-day class to kind of update you guys about the academy so far. I'm gonna offer a 5-day class. Within that 5-day class, we're gonna focus the first day on learning. It's gonna be 8 hours a day, 5 days a week. 5 days within 1 week, excuse me. We're gonna do that. For people who have paid for the course, it's only gonna cost you $75 to join it. Now the $75 is just to cover the cost of the fee that I'm gonna pay towards. You know, I want to try to get in one of my mentors to come join us. And he's gonna get into some real exclusive, you know, teachings in terms of advance. For those of you who haven't paid, it's just gonna cost you the $500. You know, like I said, everyone who's in this course, I mean, in this webinar right now, will get the discount. It's $150. You know, just make sure you message me to get that code. You guys will have up until the end of the month to take advantage of that. You know, after that on March, you know, the price is gonna be full price. And that's gonna include weekly classes. We're gonna do 2 webinars like this a week, 3 trading sessions a week. And you know, I'm a very generous guy. You know, see, I randomly pop up and be like, "Yo, let's trade." You know what I'm saying? So, I just want to win for you guys, and I want you guys all to win as well. I don't guarantee that for you, but you know, I'm doing everything in my best ability to put you guys in that position. I don't know if anyone has any questions before we answer this. Before we end this, take advantage now.
Hey, Jose, it's Amaru here. I'll flick you a message just in regards to the one-on-one.
Yeah, I apologize. That was on me. I had totally forgot that.
All good. All good. I was tired anyway.
Yeah, my daughter had a Valentine's Day show in her school. So yeah, I totally forgot about that. But I have you. I got to make up the schedule right here. I got Hemi. I got to make up for Hemi, Mark, and yourself. And also
and Malcolm.
I told Brian I was gonna take care of him this week. But let's get in contact. Even if we do it over the weekend, you know, maybe we could do a group. We'll do a group of you 3, if it helps. You know, like try to get you guys, all 3 of you guys, in one webinar, and kind of allow me and Dan to answer any questions you guys want.
Yeah.
You know,
so all you Kiwis, I'll be in your time zone for the next week, so I'll be perfectly aligned to your guys' local time for the next week. So if you want to take advantage of that as well, yeah, just message me as well.
Yeah, and to
I'll
kind of
ring you.
update you guys as well. Myself and Dan are planning. I'm planning a trip to go out there to Australia and New Zealand, either April or May. That's my goal. I gotta wait because my wife is a what do you call it? She's a teacher. So I have to wait till she's off of school to do that because I'm gonna take her with me. So
Nice.
we're planning this out. So even if it can be like a small workshop, it's free of charge for you guys that are paid. For you guys who are interested in joining the course, I'm not a grimy dude. I'm not in this for profit. You understand? But it does cost something for you to take yourself serious, if you guys understand. But yeah, I'm planning a trip over there. I'm also looking to do the New York City workshop.
Yeah.
I'm speaking to one of my buddies who has this nice office space in the city. It has a nice view of the Empire State Building and all of that. So I'm trying to secure that so we can do that and and get this party rocking.
That's not Donald Trump, is it?
No.
Nah, man. Ask him, Spanish background and all,
Oh, yeah, true.
Yeah. You know how it goes, man. But
I'll blow that motherfucker up.
Fuck Donald Trump.
Yeah, but I'm also planning. I was talking to Dan about a possible trip, maybe to like Dominican Republic, and where we all can just go to the tropical island, relax, and get together and chill, and come up with trade ideas, and have fun, man. I'm all about having fun. If I'm not having fun, I'm not living. That's my motto. I love having fun. But I always got to take care of what I got to do first before I have fun. But who says we can't take care of what we do while having fun? You know what I'm saying? I am planning on selecting. I'm thinking of a way to select 2 people to come to New York, full expense paid and everything. You guys will spend a week with me. You guys will have hotel paid for.
All I can hear in the background is Henri's going, "Say no more, say no more."
Shotgun.
Oh, way before that.
Window.
I'm thinking of a way to make it creative. I was thinking about doing it like a referral based, like whoever can refer the most students and
Sweet, send me the link.
Yeah, I don't know. Or whoever. I don't want to make it profit based because then once you start focusing on the profit and you're trying to compete to see who makes the most money, that's when we get into bad habits and we lose.
Yeah, true word.
Jose, I've got it.
And that goes completely against.
Jose.
Yeah.
I got it.
You got it?
Design. Me and you come up with a certain number of trades that have to be executed. Whoever has the highest accuracy out of those trades. We don't care about the profit number, but it has to be the highest accuracy out of those trades. And we come up with an idea that they need to identify a pattern that needs to go more than X amount of pips for it to be valid.
All right, we'll develop that idea. That sounds real good. I like that. I mean, anything. Listen, all I'm trying to let you guys know is that I'm trying to pay it forward to you guys more than just offering you this education. I wanna build you guys. I want us to really connect and move forward in life. Money is not the most important thing in life, and everything that's important to us is impacted by money. So that's why we are here. That's why we're doing what we're doing. And I guess we'll end it here. I see someone wrote in the chat. Roberto, I see that you said you missed it. The webinar will be recorded. Don't worry about it. I'll personally figure out who you are and send you the link. But it'll be in the group chat, or you can just simply search in YouTube True Profit Academy, and you'll see the video there. Tomorrow, it'll be up once we finish this. I'm gonna download it and upload it. So Don't stress out about the information missed. Just like a trade entry, there'll always be another opportunity. Other than that, I wish everybody. Oh, Roberto, yes, Portuguese. Oh, you're the one that works in the bar, yeah. Gotcha. All right, yeah, we're in touch. We're in contact. Don't worry about it. I'll get that over to you. But other than that, I hope everybody has a great day, great evening, a great morning. It's about to be 4 a.m. over here at work. I'm gonna try to get some sleep, and I'll see you guys tomorrow.
Thanks, brother.
Cheers.
Everybody.
Thanks, man. Appreciate it.
Later, brother.
Yeah, Jose.
Yo, Dan, have a safe flight, my brother.
Yeah, I'm delayed something wicked, man.
What the heck? Oh, is that storm still?
Yeah, storms. The blue lights came on the runway, and the runway actually got shut down.